Stop getting wrecked. Alt season isn't here yet. Hey guys, it's Keith Allen. Today we're going to talk about some of the things you need to do to survive this volatility. And of course, I'm going to show you what is pointing to the fact that alt season really isn't here yet. We did an analysis on this, I think it was my last video last week. And we really came to the conclusion that this is not yet a confirmed alt season. Yet people are like, the narrative is really strong. People are getting excited and over enthusiastic, and a lot of people are getting wrecked. So we're going to talk about that. We're going to show you the metrics, and we're also going to show you some ways to try and navigate this. Okay, so let's go ahead and get things started. If you're new to the stream, how you doing? My name's Keith Allen. I am a work from home dad. I am a full-time trader, and I'm co-founder of Material Indicators, which, by the way, we've got a new indicator out. Past couple weeks, we're still in beta with it, but it is available to our Premium Plus subscribers, and we are having a sale on Premium Plus. Literally every retail product we make on sale right now, 30% off. All you got to do is enter code MITS30 for 30% off Premium Plus. You get links to it in the profile down below, in the description down below. So also, of course, I really appreciate the engagement. Live chat is open. If you've got questions, I'll do my best to answer them. If you have insights, we'd love to hear them. So I see that Relax is already here. I'm glad to have you with me, man. And we're going to climb into this thing. And the first thing that I am going to show you is a interesting chart that I put together. So you know the rules. This is for you guys. Live chat is open. Smash some buttons. Help me grow the channel. You know how this works by now. Let's go ahead and start sharing a screen. I'm going to go with this, one of my favorite charts recently, to be honest with you. And every time we get into these situations where it feels like we might be approaching an alt season, or people are questioning whether we have an alt season, I go to this chart. And what we have here is in orange, this is Bitcoin dominance. Everybody's probably familiar with that one. This purple one, I used to use Total 3. Now I use one called Total 3 ES that TradingView was kind enough to create for us. And it's basically Total 3 ES is the top 100 coins by market cap, excluding Bitcoin, excluding ETH, and excluding stable coins. ES would be ETH and stable coins. So that one's really cool. And then this green one down here is, instead of just using USDT dominance, we now use stablecoin dominance. Okay. So what you can see is we've had this divergence building here since June 22nd. And that's why we started seeing alts rally, and we heard all the, everybody's starting to chatter about alt season, alt season, alt season. We had this beautiful divergence between Bitcoin dominance and Total 3 ES, while simultaneously, and this is the third component that you look for in these scenarios, and that is a decline in stablecoin dominance. And so we've had that. And then this week, things kind of changed a little bit, right? We started to see Bitcoin dominance defend this pretty much a double bottom here around that 60% range. And then we saw a decline in altcoin dominance, or Total 3, at the same time as that, right? So the divergence swapped. And now we see things clicking back in the other direction. And we see what happened with stablecoin dominance here as well. So this continued for a bit, and then the stablecoin dominance started to revert, and that I think a lot of people started to panic because of that, and we saw a lot of trades close, and a lot of people get flushed out. So this really, moves like this. This is more of a fake out and a shakeout than anything else, in my opinion. And that's what you have to be careful of, right? People have visions of what an alt season is. And I don't know, I've said this before, I still don't know if we're going to see an alt season in the true historical fashion that we have seen them in cycles past. Okay. And that's largely because of the incredible amount of interest in um, institutional interest in Bitcoin, and now most recently ETH as well, right? So I want to take a look at that. Speaking of ETH, because really what kind of triggered this was this emerging trend of ETH treasuries. And so ever since we saw Thomas Lee, not Tommy Lee, the drummer, but Thomas Lee from Fundstrat, come in and discuss starting a Ethereum treasury. And for all the reasons that he wanted to do that, we saw a lot of sentiment for ETH. And it is, look at this. I mean, it just exponentially started to blast. 499 million, 546 million, 394 million, 102 million, 426, 324. All right. So, and this is all just from BlackRock, by the way. So we've seen larger totals coming in here. Obviously, this is big. So here's the sum side of that. Bottom line is massive inflows coming into the ETH ETF here lately, and that is what's really been giving ETH a boost. This narrative really seems to have legs in terms of ETH kind of being the digital oil of the internet and the future of finance. And of course, we have some legislation happening that is supporting this, as we now have some regulatory clarity for banks, and we have banks trying to get positioned as quickly as they can to engage in this digital asset market. Of course, Bitcoin institutional interest has also been hot, but the past few days it's cooled off a bit here, right? A little bit of selling, and that's normal. When you're reaching the area of all-time highs, it is common to have some selling, profit taking. If you're not taking profits along the way, quite frankly, you are risking a lot. You're risking giving it all back or worse. So disciplined traders, the smart money, buys when price is going down and they sell when price is going up. Okay. So doesn't mean you sell everything, but taking some profit along the way, dollar cost average, that's easy for me to say. Let me try that again. Taking profits along the way, dollar cost averaging your way out, just as you dollar cost average your way in, really is how the smart money works. Okay. Trade, you don't have to be a millionaire to be the smart money. You just have to be smart to trade like smart money. And then you can become the smart money. Any amount can be the smart money if you are trading with your brain instead of with your emotions. Okay. So let's go back to this chart here for a second and talk about what this means now, right? So up here I have what was the prior high in the current cycle, and this was off of for those alts, by the way. And this was off of the Trump pump on election day up to here. So this was end of December, and things started to taper off. And of course, we saw prices come down since then. And then, of course, Bitcoin dominance reached new highs, and we have pulled back from that, trying to defend this double bottom as we talked about. So what does this all mean? Well, let's first talk about what it means for Bitcoin. The fact that Bitcoin is hovering in this range, despite the decline in dominance, is very impressive, and that is really a testament to the institutional demand. A lot of hodling going on, and as you can see, we topped out here locally at just above 123,000, and we've been consolidating in this range. And holding strong above the 21-day moving average. Most importantly, holding above these Timescape levels. Now, if you haven't seen this indicator before, you're going to want to pay attention because we're going to get into this, and you're going to see how incredible this very simple indicator is that can literally eliminate a lot of your stress, a lot of your anxiety, and a lot of your losses if you follow a very simple rule. Okay. So when we're drawing trend lines, when we're drawing trend lines, they're kind of, how should I say, no two people draw trend lines the same. Okay. Some might draw it from wicks, some might draw it from candle bodies. I personally like to draw them from line charts. Um, and so, however you draw your lines is a little bit subjective to interpretation. What is not disputable in any way, shape, or form is time-based trend lines. Okay. And these time-based trend lines in this Timescape's support and resistance indicator marks the yearly open. As you can see it right here, 1/1/2025. Here was our yearly open. It marks the first week of that time frame, and it marks quarterly opens. As you can see here, here's the Q2 open and the first week of that time frame. You might ask why this matters. And the simple answer is because it is number one, immutable and indisputable when it was, right? This isn't open for interpretation, right? We know with absolute certainty where the open price was. And if we draw that line, we can know that if price is trading above that line, our uptrend is likely to continue. And if price is trading below that line, then price is likely to break down. And it works with incredible consistency. As you can see, if we go back historically, you can see all the times that has come into play, and it comes into play all the time. Now, on a dyno coin like Bitcoin, you have lots of history and you have lots of lines. Well, there's strength in those overlaps in the areas where there's more of those timescape levels clustered together. Those tend to create stronger resistance support levels. As you can see here, broke through here on the COVID crash, and then found support down here on a prior timescape level of this was back in 2017, okay? Q4 2017. So even the historical ones matter. I think that the more recent ones, like the last year to 2 years, are most relevant at any given moment. But when you have deep concentrations like that, I wouldn't ignore it. The other thing I like is when I have confluence with other indicators or trend lines. I think that also, I know that also builds strength in those resistance and support levels. As you can see here, we had confluence here at this point with both the 21 and the 50-day moving averages, and we had two very closely consolidated timescape levels. Down here was the Q3 open, July 1st, and here's that first week up. And you can see how price consolidated here, right? This held as support. Price consolidated here for a little bit before the breakout. Once we moved above, we saw things moving. Okay, so look at these as ways to validate breakouts, and not just on a wick above. You want candle closes above, and that holds for any time frame that you're trading. Okay, and in terms of where we sit now, well, there's a chance. We're consolidating nicely here, and I think this is very healthy for Bitcoin to be consolidating in this range. But there's a chance for a retest, and there's a couple reasons I think that a support test is coming. One, if sentiment for ETH and an alt season continues to grow, then money is going to rotate out of Bitcoin into ETH and alts, as we can see, and as I just showed you previously on this other chart, right? This downtrend here that has just reverted on Bitcoin dominance, parallel to an uptrend on total 3, while stablecoin dominance is declining, right? This means that money is not rotating into stable coins, and it is rotating into alts and ETH. It's rotating out of Bitcoin and out of stable coins into alts and ETH. And can we break this level? Can we see total 3 rise to a new high? Will we see Bitcoin dominance fall to a new local low? Will it go below 50% ever again? Will we ever, and it might, but what my question is historically alt seasons have been with Bitcoin dominance and like the sub 50% level, like 40% level. And I don't know if we're ever going to see that again because of the institutional adoption that we have, right? Anytime Bitcoin dips like that, it's getting bought. And so keep that in mind. Whatever your strategy is, if your strategy is to stack sats and to stack as much Bitcoin as you can, then you're going to look at those dips as buying opportunities. If your strategy is to chase alts and scalp, there's a lot of money to be made and there are a lot of opportunities, but there is a lot of risk that goes along with that. And you can mitigate some of that risk by, number one, using these Timescape levels. I just showed it to you on the Bitcoin chart. Let's look at some alts. Okay, same set of circumstances here. As you can see, this is Polkadot, and if you have a coin that you want to look up, pop it in the chat, and I will do my best to do some analysis on that. But do me a favor. Please don't share the shittiest of shit coins in your project. Okay. Just like legit coins. Okay. So anyways, back to what we're talking about here on Timescapes. So where are the recent levels, the most valid levels, relevant to this year? We look at how high our yearly open is. We're way up here, $7.60 some odd cents. Okay. And just the move from here, this perceived breakout from here up, that's a big move, right? From here just to get back to the yearly open, that's an 88% move. That's a huge trade. Don't be greedy and look for more. You might get it, but gosh, if this happens, I'd be taking some profit up in this range. And then let the rest go and see if we get to, make our way into price discovery. Okay. Because there's a lot more potential upside. We know this. But in terms of when that breakout is happening, so if you don't have conviction on this coin and you're not looking to hold it or stake it, then you mitigate the most risk by waiting for it to clear these respective levels. And so this was the first week up here. The actual yearly open was down here at 62%, still a great trade. But it's, you got to clear both of these levels to get to a bona fide breakout, in my opinion. Okay. So just based on the structure, over the past year or so, yeah, we see that breakout happening, but it's not confirmed yet. We still have to get over this 200-day moving average, which has had 1, 2, 3, 4, 5 hard rejections so far. And so now we're getting our first support tests off of the 21-day moving average. And so again, this is a risky bet until we start clearing some levels. Now, what's positive here? There are some positives in this, okay? And one is the fact that we are above this quarterly open down here, 7-1. That's still a 17% move to the downside. Not sure that you want to take on that much risk until at least we clear, say, the 200-day moving average. If you're not already in a position, I mean, if you get these perfect snipes from the bottom, then it gets interesting, right? But look at where things are. Look at, and I talked about this before, where there's confluence with trend line and other indicators and other TA. You really find some strength here. And look how the 21-day moving average beautifully correlated with the Q with the quarterly open, the Q3 open, and we bounced, had a beautiful bounce here. And so that open happened right here, and price was down, attempted to break out, broke back down, not decisive, not decisive, not decisive. Now we got full candle bodies above it, and then boom, you get your move. So you wait for price to clear those levels to have some confirmation that that move is likely to develop in the direction that you expect. Likewise, if you wanted to short, when things break down is when you consider opening your shorts. Now, this did not have full candles below this Timescape level. And so I would not have opened a short here yet. I would have waited to see full candle bodies below this before I felt like things were going to break down further. So now we have this unwinding of moving averages. And if this trend continues, like if support holds here, then this will continue to unwind and we have a developing uptrend. But in terms of what is next, really you can see a lot of resistance in this cluster of historical Timescape levels, including recent Q2, April right here. So that needs to be, you need to pay attention to that. We just wicked through it today and now trying to hold this and climb out from here. But more up above around this 200-day moving average. And if this clears, then I like the trade of, and the risk reward setup of potentially going towards these higher levels. Where was that? Here is the yearly open. That's a 45% move. That's a much better risk reward setup on that. And if you used your, if we use this Q2 as a potential stop loss, that's pretty deep. But in this market, you got to be, you have to give these trades room to breathe and room to develop. That may be more risk than you want to take on, and that's fine. You could find any level in here that you're comfortable with, but I certainly wouldn't probably go beyond this. It's still a pretty solid risk to reward setup. And of course, if this clears, this is the conservative TP. If we get this breakout from here, I would see that as 45%, that next level at 68%, and then potentially moving into price discovery. You could go, how many X's? That remains to be seen, but there's certainly a lot of upside potential here for that coin. And we could look at any coin and come up with the same thing, or at least similar setups, because a lot of them are setting up this way. So another issue that a lot of people are having is they're jumping in on coins thinking that things look good when they really aren't. And so a way to mitigate that risk is to, if you're not good at picking those great levels, those lows that you think that price is going to bounce from, and you keep getting stop hunted or liquidated, then consider using something like a mean reversion strategy. And this is the MTF mean reversion indicator. And it's really powerful. This is actually the first tool we created at Material Indicators. Like before we even started the company, we had this. And so I've been trading with this for now like since 2018. And it is rock solid. Now you need to understand risk management on this for sure, because it's happening in periods of drawdown. But the hit rate on this is huge. Hit rates mean nothing if you don't have good risk management. So risk management is key here, right? You want info on the hit rates and all that stuff, you go to the website and find it. Links are down in the description. But the principle of this is that price likes to return to mean. This is a fib-based channel here. So the white line is the 0.5 fib. This is on a low time frame. It's a 1 minute candle. And this is showing us all the times. This is ETH BTC. You want to just start printing some Bitcoin? Okay. Here's what you do. You find your Bitcoin pairs. You find what channel, what range they're trading in to set your deviation. And Bitcoin ETH has been the ETH Bitcoin pair has been not very volatile, I will tell you. So this is a pretty conservative deviation, but it's a pair that I like because if I get stuck holding ETH, I'm okay because I think ETH is going to be fine in the long run. But you can see all these reversions and how much, what could you do? Well, there's two ways to trade this. You could just go with conservative, scalped, take profits and take them as quick as you can. And if you did that, you would be turning capital pretty fast. Look at this 3% move. What's this one? 1%, right? I like, I'll take them 1.25%, 2.5%, and be very happy. Now, when you get these multiple entries like this, I dollar cost average my way, right? So I'm taking these. I have bots taking these as small entries, and that way we can dollar cost average our way in, right? And I'm just going to ballpark this and say between here and here, my average entry is somewhere around here. And at this point, I probably would have already taken profit, unless you have a technically based target at that point. So there's again lots of opportunity and lots of ways to make money using mean reversion. And I think that this is a safer way to trade right now until until we have some confirmation that alt season is here. You want those big double digit gains, you want the 40%, the 60%, the 80%, the triple digit and multi X returns. Those don't happen frequently and they don't happen on every single coin. And I'm telling you, this is a market where people are going to get thrashed. Everybody is excited. Everybody is getting euphoric about alt season, and it's not even here yet. Don't be the victim of following the hopium and the hype. Follow the data. The data says alt season isn't here yet, but the opportunities are. This is a trader's market, and this is how you trade it. And this is how you mitigate a lot of risk trading it. Okay. So I am at this stage taking profits conservatively on most of these scalps. And there are very few coins. The only coins that I'm holding for any length of time, other than Bitcoin and ETH, are coins that I'm staking. And that's only a few. So again, the time to really go heavy at alts. This is a time to identify the setups that you're looking for and identify the coins that you want to trade. And I'm telling you, if you chase every shit coin out there, you're going to get hammered. You're going to get beat up. You're going to have some wins, but you're also going to have some nasty losses. So be mindful of that. You do not want to get thrashed in this market. It's an opportunity. This is like the opportunity to make the most money you're going to make all year during this time frame, during this period, as we see alts starting to climb and we have a potential alt season developing. These next few weeks, these next few months, who knows how long this goes, right? This could stop. This could stop as quickly as it started. Alt season may never ultimately develop out of this. So, you have to proceed with caution and you have to know where the limits are, where the levels are. And this Timescape levels really eliminates a lot of the guesswork because these don't repaint. And there's no, you don't have to wait for the candles to develop to know how the trend is going to go. If it's below the line, the trend is going down. If it's above the line, the trend is going up. It is simple as that. Look at this. Below the line, not good. Above the line, good. Then you get this breakout. But look what's happening here. Retest, support test. So support tests are important. Consolidations are important. And this, on this particular asset, looks like it is trying to find support. And if we bounce from here, there's some pretty good upside potential. Let's look at another coin. Obviously, Solana is one that a lot of people trade. We can look at Solana here, and we can see that it also has lots of potential, right? So where are we on the Timescape levels for Solana? And you can see I also have a fib chart here showing what some potential targets and risk reward are. Here's our quarterly open for Solana. It did break this nicely, similar to what I just showed you on Polkadot, right? It initially broke down, and that first week was lower than the quarterly open. Things broke down below both of those Timescape levels. We found support at a level where there was confluence between the 21-day moving average and a historical Timescape from back in Q4 2024. And we started to see this breakout, okay? And then price broke above both of those levels, and here's the move. Consolidation under the 200-day moving average and a break above. Now we see price getting rejected here. Hasn't quite made it to that yearly open yet. So where are we going from here? We have, that's not what I meant to do. Let's just get that out of the way. We have, let's see, here's the first week of the year. Here's the yearly open. Right now, at this very moment, fighting for support on the yearly open. And if this doesn't hold, right, I'm looking for candle closes. And I'm going to be honest with you. I took a trade last night, took a flyer last night to add to a Solana position, just thinking, okay, it looks like it's going to fight here, and it looks like it's going to hold. And I got wicked out. Okay. No big deal. Wasn't a lot of money. Wasn't a big loss. It was a loss, but it was a managed loss. In hindsight, I should have waited until I had a full candle close here above this level to take that trade. And, this is a new indicator. I'm still learning with it, but that's a lesson learned. So if we can start closing above this level, the next level to watch here to validate a breakout is going to be this first week of 2025. That's not too far away. So in terms of whether or not I would take a trade here, let's see what the upside potential is. So just to get to this actual first week of the year, that's a 13% move from here. The risk to the downside to me is greater. So I would likely wait unless you're going to risk if you risked very little with a very tight stop, then you're just it's the luck of the draw. So that's about the only way I would take this position here until things break from here. Once we break above this first week of the yearly open, then the upside gets much, much better. The risk reward gets much, much better. I would go to open that position here. I would imagine that we have a potential of, at the very least, 38% to get back to the high, and likely a move to that 1.618 fib extension. That's a 95% trade, 96. And the risk at that point, much, much lower. I'd be okay taking this on because I know I can stake this coin, and I know that there's long-term health for Solana on this. Now, what does Solana look like if we're to use the mean reversion indicator? Okay, so here's a way that I can trade it and scalp it if things are not developing the way that I want, and I can just close those positions, right? So if we go back to the MTF, where did that one go? Okay, and we look at Solana. I think Solana is trading maybe with a little bit more volatility than ETH BTC was. Let's see what this looks like. So And here's how a good way to set up this mean reversion indicator. As you can see, we've got lots of signals here at that same tight deviation. This is at 1.5%, which is pretty conservative, pretty not conservative, pretty aggressive, I should say. And you can see it's been overshot many, many times. So what I do is I open a grid of different deviations. Here's 2%, here's 3%, here's 4%, here's 5%, here's 6%. And I look to see where I'm getting good signals and a decent frequency of signals. So we can tell that nothing has hit in these deeper deviations yet. I do keep those open because when they get hit, I'm happy to get filled there. So I do have bots running those deeper deviations, but it really looks like maybe, let's see. So let's take out this one for starters, and this would be 2%. So it looks like 2% is really where everything's hitting. Excuse me, 3%. Yeah. Let's see. That's 2%. That's where things are. That's where things are really hitting. That seems to be the sweet spot on this coin pair at the moment. So, there we go. So you take all these signals, you take small orders, small positions on them, and you close. Take the money and run. It's trader's market. It's not yet alt season. It's take the money and run season, and just keep stacking powder so that when we do get that validation that we are in alt season, or we do get that validation that the coins that we're interested in trading or investing in are at validated breakout levels, then you have more powder to put into those trades. Now, again, if you want to stack Bitcoin, you could do this on a Bitcoin pair. And let's see what Solana BTC looks like. And we're doing this live in the fire, guys. I haven't even looked at this. So, all right, here you go. Look, there haven't been a lot of signals, but it looks like they've been pretty good. Let's see how far back we got to go to get to this signal. It's been a minute. All right. So there was a cluster here. I personally would have, this goes back to Friday. Okay. So with the volatility that we've had, I would have closed this trade already and recycled that capital and gone into the next. So that's how I trade it. You trade it however you like. This is good for scalping, but it's also good for buy the dip DCA opportunities. So depending on where you get your entry, you may want to hold on to that and add it to your HODL stack as a dollar cost averaged entry, or you may just want it as a scalp to keep stacking sats. So however you want to trade, you can optimize these strategies to work for you, however it is that you like to trade. With that, let's go ahead and take a quick look at fire charts and see what we're seeing here. I told you that there is a possibility of a developing support test for Bitcoin. And as you can see, we've got some decent bid liquidity here above 116 that's holding price in this range thus far. Something I did want to show you though, here on in the MI dashboard, we're entering a period of extremely low beta. This is like, we haven't seen this level in a couple of years. Okay. And I can't go back any further here. Otherwise, I'd look to see if we've ever been to this level. But this is an indication that we are entering a period that Bitcoin is at or near a local top or consolidation range. And the latter, the consolidation range, makes the most sense to me at this point. And you can see this is not, that doesn't mean that it's here, boom, we nailed the top and it's done. It means that this could develop a little bit longer. Price can still move, but during these periods, we tend to see some consolidations and then some support tests and until the continuation. And so be mindful of that. So I think this kind of fits the narrative of supporting an alt, a potential increase for ETH and a potential alt season developing, because if we get this support test, because we're in this period of low beta, this is a correlation between um, Bitcoin and alts. If this continues like this, and we have it for an extended period of time, um, we could see more capital rotating into alts and ETH, and that would indicate, a decrease in Bitcoin dominance, and we watch to see how things develop from there. Simple as that. So I hope this has made some sense for you. In terms of where Bitcoin could go from here, I think that, again, this consolidation is really healthy. Any of these moving averages could serve as support, but support is strongest, in my opinion, in two places. We, of course, have our near range of our Q3 open here at the beginning of July, and that has some confluence with the 50-day moving average. So we could be here in that 109 to 107 range. And if we really get a deep pullback, and Lord only knows what kind of catalyst we would get for that to happen, Mr. Trump. But look at how closely correlated the 200-day moving average is with our yearly open range. This was the yearly open here at 93.3. That first week of the year was at 98 and change, and that so far is our local bottom. So I like the fact that this up here is above the trend line. I would say as long as price stays above this 2025 open, the bull is still alive. But if things break down from here, I would have some concern that that might be the end of the party for a while. So just some things to keep in mind. Again, we do have pretty good support here with liquidity in this 115 to 117 range. And we're just going to watch and see how things develop as we go on. But the one thing we don't have to watch to see how things develop is Timescape levels. Okay. They are here and they are set in stone. So you don't have to watch anything other than whether price is behaving above or below the line. And here again, here's Solana exactly on the line for our yearly open. And it has to close above this level. And tomorrow's candle needs to live entirely above this level to give us more confidence that things are going to move up from there. Of course, you'd want to see a break above this 0.5 fib, and onward and upward you go. Hope that gives you some insight to navigate this market. If you want more info and insight on these tools that I'm sharing, you will find links to them in the description below. And of course, as I said at the top of this, literally everything we have is on sale right now, 30% off. Use code MITS30, MITS30 for 30% off Premium Plus for material indicators.